Hi, I'm Mackenzie Evans, and this is...
I'm Brandon Hooley.
And we are with the Hirschenberg Group. Today we're going to be talking about the pros and cons of buying a home in a recession.
That's right. Yeah, we're going to go over 3 pros and one of the cons about buying a home in a recession. So one of the first pros here is we have more inventory. If you've been in the market at all in the last couple of months, you've known that inventory has been scarce. There have been very few homes on the market. You've had bidding wars. You've got a lot of competition for very few homes. And so getting into a recession, that changes naturally. So we've got a lot more homes on the market, allows you really an opportunity to find a home that maybe you really want, as opposed to feeling like you have to be rushed in buying something.
Right.
Just to give an example, a normal environment, you'll have 6 months of inventory at any given time. Well, in January of this year, I think we were at 0.7 in the Dallas-Fort Worth market. So 0.7, not
Not
7
a full month.
or 6 months, right? We were at 0.7. We weren't even on a full month.
Right.
Even last June, we just finished up here. We're in the middle of July. So in June, we were, 1.7 months worth of inventory. So we still have a ways to go. But again, buying in a recession creates that inventory opportunity. You have a little bit more flexibility in what you choose.
Right. A second pro during buying during a recession would be less competition. We see less buyers wanting to buy homes, and because we have more inventory, you get less offers on a single home.
That's right.
So instead, like 2 months ago, where you were going against 20 offers, 30 offers, now you may be going against 2 offers, which is definitely very nice for our buyers that still need to buy right now.
That's right. Less competition goes hand in hand with negotiating power. So right now, as a buyer, you actually have a little bit more negotiating power.
Yeah.
Whereas before it was pretty much you do whatever it took, and sometimes even crazy things, to be able to get a house. Now, the seller may be willing to really work towards the buyer's timetable, which is really important for you. Or they may be looking at, making concessions with regards to repairs on the home, or things that come up in the inspection, or even paying for a new title policy, or those kinds of things.
Correct.
So you have a little bit more negotiating power.
Yeah.
Those are kind of the 3. Again, more inventory, less competition, and negotiating power.
So let's talk about a con that we see right now for our home buyers buying during a recession.
That's right.
Typically, it's the financial side. If you've been watching the home market, interest rates have been on the rise. Now, we have 2 tools that we're going to talk to you about, overcoming this, or 2 different options.
I want to just quickly touch on interest rates, right? Right now, we're in the 5 to 6 range, but historically, 7% was average. We're just so used to this 2 and 3% that, so yes, when you're used to that, it's hard to absorb this, but realize that we're still actually pretty decent from an interest rate perspective.
Exactly, still under that average.
Yeah.
So the first tool we're going to talk about is seller financing. And this is when you say you're taking out a 95% loan to value for your mortgage loan. So you're putting 5% down, and then you're taking out 80% of the loan from a typical lender, and the seller is willing to finance that additional 15% at a lower interest rate. And this can be something that's a really valuable tool for our buyers that are trying to get their monthly rates down.
That's right.
And it provides income for those families or sellers that are still wanting income coming in on their property. So they're essentially acting like another lender.
That's right. Yeah, the catch to that is they have to make sure that that house is paid in full, right? So it can't have any mortgage or anything that would preclude them. Typically, mortgages have wording in there where once the house is sold, it needs to be paid off in full.
Right.
Yeah.
So they don't need to have a current loan on the home.
That's right.
The second tool we're going to talk about is assumable loans. Now, this is very desirable for our government guaranteed loans, the FHA loan, and VA loans. This is when a seller is able to, or a buyer is able to assume the seller's current mortgage loan at a lower rate.
Yeah, that they got a few years ago when the rates were much lower. That's right.
Say they have a loan at 2% and now we're at 6%. That looks very desirable for a buyer who wants to assume that loan. You just need to make sure it is an assumable loan. You do have to still, as a buyer, qualify with the lender. That is the caveat there.
Yeah, and any difference, right? So you'd be absorbing somebody's loan. I would imagine they have equity, right? And so you would then come to the table with that equity, and that would be your cash portion that you would come to the table with. So there are some advantages, clearly, of buying during a recession. There are some cons as well, right? We just want to make sure that we're aware of that, and that's where we come into play, right? The Hirschenberg Group and us as realtors, we're here to help you through that process. There's a lot that's involved. That's our jobs.
Right.
We're the experts, or we try to be the experts, and we work with our partners at the lending facilities and institutions to make sure that we get you the new home that you need at the best possible price.
So if you like this content, please like and subscribe to our channel.
That's right. And if you have any questions or comments, please comment below. Thanks so much, guys. I'll see ya.